Welcome all to the masterclass of this afternoon of the Foundation for Auditing Research. I see a lot of friends and also new faces next to the familiar faces. So by way of introduction, my name is Olaf Bik. I'm one of the managing directors of the Foundation for Auditing Research, and it is my very honor to welcome you, and in particular the presenters of today, Anne Vanstraelen, Karen Schelleman, Roger Deumens, on their masterclass on the drivers and impact of audit committee involvement on audit quality. And that fits well with the objective of the foundation. As many of you know, the objective is to do academic research into the drivers of good audit quality and to academically inform the public debate and the professional development of the auditing profession. And this topic in particular is relevant in regard to what you can call the entire corporate reporting and assurance supply chain. Because, of course, we can look at the auditor when talking about, and the audit team and the audit firm when talking about audit quality. But audit is also you could say a collaborative effort, where the auditor coordinates or collaborates, if you'd like, with the client, financial management, audit committees. And I guess it seems logical to assume that the audit committee has an effect on audit quality. But that's all I'm going to say now, because on this topic, because I'm sure Anne, Karen, and Roger will shed light specifically on that question. So I would like to welcome especially the practitioners in the audience, because of course it's our objective to bring academic insights to the practice of auditors and their stakeholders, and in this regard specifically to audit committees. Sorry? Okay. And so I look forward to a fruitful discussion and a dialogue. You are welcome to raise any questions through the chat, for example, and one of the presenters will take particular note of that and make sure we will cover that. So please don't hesitate to ask any questions. We are here for you, and we will have till 5 p.m. and I'm sure the presenters will also initiate interaction. We are all well aware of the etiquette, so you can also raise your hands. That's the button on the top. If you want to speak, you can use the chat, and in between, well, we would like to ask you to mute your microphone, but if you feel comfortable, we would prefer to have your video on so that we can have a look at each other and we can see each other. So one last note is that this masterclass is being recorded, but don't hesitate to raise any questions. That recording is only for us to be able to make a report that you can read back what has been discussed, and there will be no quotes or no references to anybody in particular. So I wish you all the pleasure, and I wish us an interesting dialogue on this topic of the drivers and impact of audit committee involvement on audit quality. If afterwards you can't get enough of this topic, I would like to direct you to the FAR website, where you can also find a practice note on this topic, a literature review on this topic, and also a FAR View podcast on this topic. And if that still isn't enough, of course, you can always ask Anne for further information. I'm sure, Anne, that's okay. So with that, I will end my welcome. And Anne, I will hand over to you. Thank you very much, Anne, Karen, and Roger, for being with us this afternoon.
Thank you very much, Olaf, for your kind introduction, and welcome everyone to our masterclass. So let me start with presenting our research team. Ganesh Krishnamurthy from Northeastern University, who unfortunately could not be with us today due to unforeseen personal circumstances, as his in-laws are both in hospital. So that's very unfortunate, and of course our thoughts are with him. Rogier Deumes, Karen Schelleman, and myself from Maastricht University, and Ulrike Thurheimer, a former PhD student from Maastricht University and currently assistant professor at UNSW Sydney. But as you know, in Sydney, it's currently the middle of the night, and so I hope that Ulrike is safely asleep at the moment. Who are we missing? I'm not sure whether Matthijs is in the audience. He was trying to be in the audience, but unfortunately we are missing Matthijs van Petegem, who was involved in our project right from the start, and he was very instrumental for the development of the project. But unfortunately, Matthijs has decided to leave academia, and he's now working as a financial analyst at Watkins Wellness. So for those of you who are dreaming of a hot tub, you may want to reach out to Matthijs. Okay, so this is us, but maybe it's also nice that we would know who is attending today. So the only thing I can see here is 26 people. So Esther will be facilitating this. So if all goes well, you will now receive a link in the chat, and then we will await the results, and then Karen will share this with us. Okay, so in the meanwhile, while we're waiting for this, let me share the agenda for today. So the first part will deal with the what, why, and how question. So I will explain what our project is about, why we believe it's important, and how we conduct the research. And next, Rogier will share with you our first findings. And in the end, I will conclude with what our next steps are for the project, and I will also summarize our key takeaways, at least our key takeaways so far. Now, if you all have already mentioned this, so if you have any questions during the presentation, so there are many options, you can put these in the chat. Karen will try to respond. You can, of course, also raise your hand, and if I miss it, then also, Karen, please please let me know. Or simply you can also unmute yourself. That's also fine with me. And at the end, we will also still have time for Q&A. So we're also looking forward to a fruitful dialogue on this project. All right. So let me start by explaining to you a little bit what our project is essentially about. So the goal of our project is to improve our understanding of, first of all, the determinants of the level of audit committee involvement in the external audit, and secondly, how this affects audit quality, and for which we consider input, process, and output factors that are relevant for audit quality at the engagement level, following the ISSB audit quality framework. Now, Olaf already alluded to this when introducing the project. There are different players in ensuring financial reporting quality. and they are visualized here on the slide. And Ganesh Krishnamurti and his co-authors, they call this the governance mosaic. And one of these key players is the audit committee, which together with the CFO and the auditor are instrumental for the quality of the financial statements. But now, if you look at audit committees throughout the world, you see a lot of convergence in regulations and practices on what is considered to make audit committees more effective, like stricter regulations on audit committee independence and expertise. But despite the convergence in regulations and in practices, there's still a lot of variability in the effectiveness of the audit committees. So some audit committees, they appear to underperform, despite the fact that they are technically meeting all the requirements, or actually have all the necessary qualifications to safeguard financial reporting quality. But while others are actually outperforming. So of course, that raises the question why this is the case. And this is essentially what we try to get an understanding of with our project, because our understanding so far is still incomplete in that regard. Now, for the because I know that there are a lot of non-Dutch people in the audience, so I apologize for those for our non-Dutch speaking audience for the Dutch excerpts which I've put here on the slide. But the point that I want to make here is that the Dutch public oversight body, which is the AFM, they released a report last month reporting on their findings on the role of audit committees in the selection and in the monitoring of auditors. And the AFM, they concluded from their findings that audit committees should better monitor the auditor, and that the auditor selection procedure should be more transparent.
I'm interrupting you now, Anne.
Okay, that's fine.
Because we have the results of the poll. So we have 18 responses, and it seems that us academics are in the majority. So okay. 16 academics, 1 practitioner, and 1 other. That makes me curious what the other here is. Maybe this other person can expose him or herself in the chat. But yes, it's mostly academics.
Okay. All right. Thank you, Karen, for sharing.
I'm sorry, now I need to get your slides back up. I hope that works.
Okay, so let me see. I see many friends now on the. Hi. So let's see how we do this. Yeah, it's a little bit unfortunate that there are a lot more people from practice. That would have been nice. Okay, so let's see how we can share this again.
And now Amco is saying that multiple answers were not possible, so even though the question mentioned that it was. So maybe there's academics that are / something else in the audience. But we'll never know.
Okay, yeah, so let's see now, because where's your shared window? Sharing is paused until you return to the shared window.
Presentation mode.
Dismiss. Dismiss. Okay, so let's see more. So you see, I'm not used to work with Teams. I'm used to work with Zoom. So how can I share my comment? Because I don't have the.
We see your screen, but it's not in presentation mode.
You see my screen?
Yes, but if you click presentation mode on PowerPoint, it should work.
And what slide do you see?
The first one. Well, I don't know where you are. But if you click presentation mode, it should work. At the bottom.
So what do you see now? Why is our project important?
Yeah,
Yes.
but if you click presentation mode at the bottom. Yeah.
Okay, so now here, yeah?
Yes.
Okay, so I now don't see you anymore. So yeah, so that went wrong then again. So that's, yeah, okay. That's the way it is then. All right, so so where was I? Yeah, so I was explaining to you that that the AFM was actually had in their latest report that they provided a number of recommendations on how the audit committees could actually strengthen their role. And Fijke Sijbesma, for the non-Dutch people, he's a well-known captain of industry in the Netherlands. And he says in a reaction to the AFM that according to him, the challenge of an audit committee essentially lies in finding the right balance between being critical and offering support. And in order to do this, there must be a relationship of trust. And of course, Fijke Sijbesma is referring here to the relation between the audit committee and management. But we argue that this also applies to the relationship between the auditor and the audit committee. Now, let's briefly look at what we already know from prior research on the relationship between audit committees and audit quality. But as Olaf already mentioned also in the beginning, for a more extensive overview, I would like to refer to our literature review and also our practice notes, which is available on the FAR website. But let's look into some key takeaways from the more recent studies. So first, recent studies predominantly show that audit committees, they complement the external audit function. And there are a number of factors that are generally perceived as being desirable audit committee inputs for audit quality. And those include independence, financial expertise, experience, and size of the audit. But on the other hand, there are, of course, also undesirable audit committee inputs, most notably the CEO involvement in director selection, which can actually undo the positive effects of the audit committee. Audit committees with personal or friendship ties to the CEO, or when there are social ties between the audit committee and the external auditor. Audit committee equity compensation, busyness of the audit committee chair and experts, and problem directors in the audit committee. So these are considered to be undesirable inputs, where then the effectiveness of the audit committee is weaker, and that can negatively affect audit quality. Now, in line actually what also the AFM in their report were suggesting is that recent studies also indicate that management continues to have a significant influence on auditor selection and appointment, which could potentially impair perceived audit quality. And this is also something that AFM is putting emphasis on, because they say, well, you have to be more transparent. So you cannot, if you will present your auditor to your shareholders, then at least there have to be two choices, and you have to motivate why you then go for one or the other. And finally, recent studies, they indicate that audit quality benefits from the relative status and power of the AC vis-a-vis management, their tenure, litigation risk, also their whether there's cash compensation and gender diversity. Now, what do we now want to contribute to this already existing body of knowledge, and how is FAR actually helping us with achieving this, for which we of course are very grateful. So essentially what we want to do is we want to open the black box of the processes that take place within the audit committees. So within the interaction that takes place between the audit committee and the auditor. So beyond just the factual inputs and outcomes. And we argue that audit committee involvement in the audit process is crucial for its effectiveness, next to having audit committees which meet the regulated functional characteristics, like the size of the audit committee, their expertise, and their independence. So we want to focus on the substance rather than on the form of audit committee characteristics. And so, for example, most audit committees, they have power on paper, but the more important question, of course, is whether they really exercise this power in practice, because that's what you expect that will matter. So, in other words, while the functional data are an important piece of information, we don't really understand yet how this all comes into play when the audit committee and the auditor are working together, and how their interplay actually impacts the process and ultimately audit quality. And that is what we mean with the FAR data, which actually allow us to go the extra mile and to do something above and beyond what we already know from the research so far. So how do we conduct our study? So I think one of the things that we believe is unique, and where we could make as potentially a significant contribution, is that we use a multi-method approach, allowing us to get a more holistic view on this subject matter. So as I just mentioned, we want to go beyond just the archival or data-driven approach from public sources, and focus more on what we call soft components or behavioral components. So therefore, we conducted a survey among partners and the audit committees of their clients, to get insights on the perceptions of partners and audit committee members, on the involvement of the audit committee in the audit, on their power, on their cohesion and the social cohesion between the group. Do they act as one group? On the cooperation and on the perceived outcomes. And we complement the survey data with archival data, including which includes financial statement data, but also audit engagement data and partner data. And all the big 4 audit firms, they participated in our study, for which we're very grateful, and also one non-big 4 audit firm. And the clients in our sample, they consist of 2 batches. So initially, we wanted to focus on the listed companies, and because of course also of the regulations, the listed companies, they need to have an audit committee in place. But since this did not result in a sufficient number of responses, at least not for conducting multivariate analysis, we went for a second batch of companies, and we focused on hospitals, on healthcare institutions, and on social housing cooperatives, most of which have an audit committee in place. Maybe if there are any questions, so I can't see anything now, so I'm really blind. So Karen, are you managing in the chat, or?
Yes, I would interrupt you if there are questions that I don't know the answer to and I need you over here for, but so far, no.
All right, okay. So far, so good then, if there's no needed questions. All right, so let me show you our sample composition. So as mentioned, we have 2 batches, and the first batch relates to our listed companies. And there we have 44 responses from partners and 13 from ACs, so from audit committee members, and we have 9 paired observations. Of course, the paired observations are very interesting, so we are hoping to have even more, but okay. But with a paired observation, we mean that we have a response both from the partner and the audit committee for the same company. In our second batch, for which we are still in the data collection stage, but we have included as much as we currently already have. So far we have 27 responses from partners for the second batch, and 43 from audit committees, which is really good because that's much more than what we had in the survey response for the audit committee members in the first batch. And we have 24 paired observations so far, but this can further increase because this is still in progress. So we hope that more will come in.
Can I interrupt you? Yeah. Remco asked us what the selection criteria were for the additional non-listed organizations, saying that PI companies listed and non-listed was maybe not a more logical selection criteria, because of course our second batch is in that sense quite distinctive compared to the first batch.
Yeah, that's correct. But we chose then for where we thought that the likelihood of the responses would be the highest, and also where these type of corporations, they are now also will be required to have an audit committee in place, if I'm correctly informed. I believe this is something that is already in force. Maybe Chiba, I believe Chiba is also in the audience. I believe he can also comment on that.
There is a total of about 850 public interest entities in the Netherlands. But if we really look from, okay, which entities are economically independent and also have their own audit committee, then the subsample gets way smaller. For example, if you look at ABN AMRO, a bank, it has several subsidies that also qualify as public interest entity. But in the end, you have kind of one overall governance structure. So legally, they are different public interest entities. But what I understand from this study is that the team really tried to focus on economically independent public interest entities. And that is really just a handful. For example, of the 850, if we look at who of those have, for example, regular earnings goals, that are less than 60. That's quite a small sample in the Netherlands.
Yeah, so that's for sure. And so we were not expecting, and so we knew that from the start that the maximum amount that we would get was already, we were thinking around 100, maybe max. But yeah, it was lower. So then we had to look into an alternative, and this then made most sense to us. And also, if you see now in terms of the responses, especially for the audit committee members, it's pretty nice. So we are really happy with that choice. But of course, we will also run the analysis separately for these two parts to see whether the results are actually the same. But we've already done that, at least for our descriptives, because we started with the batch 1, because that came in first. So we could compare, and that seems to be relatively similar. But of course, but that's something that we definitely will further look into when we have everything complete. All right. So in total, so what can we currently work with? So for the two batches, so we currently have 71 responses from the audit partners, 56 for the audit committee members, and we have 33 paired observations. And as you can see from the figures on the paired observations and the unique partners, then you see that some partners completed multiple surveys for different clients. And of course, we are very, very grateful for this, because of course their time is also precious, and filling out multiple surveys, it's and it's a lot to ask. So we are very happy, grateful for that. All right, so let's turn to the development of our constructs. And our main construct, as I explained, and so we want to really focus on that level of involvement of the audit committee, because as I mentioned, on paper you can technically meet all the requirements, but what are you actually doing as a committee? And so how involved are you in the audit and in your interaction with the auditor? Okay, so we develop a construct around the level of involvement of the audit committee in the oversight of the financial reporting process and in the oversight of the external audit process. And so note the ovals, that's which represent, of course, our latent constructs, but they also remind us of the chocolate eggs that will arrive soon in a couple of weeks. So what's in our eggs? So for the level of audit committee involvement in the oversight of the financial reporting process, we use a combined score of 6 items which show acceptable to good internal consistency. And these 6 items are so the extent to which the audit committee asks probing and challenging questions to management, the extent to which the audit committee puts effort into gaining awareness and understanding of the key financial reporting risks, the level of audit committee involvement in discussions regarding accounting policy choices and accounting alternatives with management, the level of audit committee involvement in assessing fraud risk and management integrity with respect to financial reporting, the level of audit committee involvement in discussions about internal and external audit findings and management's responses to those findings. And finally, the level of audit committee involvement in the evaluation of the quality of internal controls over financial reporting. And if we then turn to the level of audit committee involvement in the oversight of the external audit process, we use a combined score of 10 items, which show good to excellent internal consistency. So for the partners and the audit committee members. The 10 items are listed on the slides. I'm not going to read all these 10 items, but I just want to highlight some items which relates, for example, to the extent to which the audit committee takes up the issues raised by the external auditor. And this is actually one of the main conclusions in the AFM report that I referred to earlier, that they perceive that could be improved. And another item is the extent to which the audit committee asks probing and challenging questions to the external auditor. And the level of audit committee involvement in overseeing negotiations between management and the external auditor over controversial accounting issues. And this is something that we also will come back later on, because of course the audit committee plays a very, or could play, or should play an important role once there's disagreement between the auditor and client management. So that's really when audit committee should step in and to help ensuring the quality of the financial reporting. Okay, so we also use a combined score then of the level of involvement in the financial reporting process and in the audit process, so to measure the overall audit committee involvement in the audit oversight process. Now, based on theory and some prior research on audit committee effectiveness, we focus on the following factors that could be expected to influence the level of audit committee involvement, which are the power of the audit committee, the fit of the audit committee with the supervisory board, and the social cohesion of the audit committee. So with the power of the audit committee, we mean the relative power of the audit committee vis-à-vis management, which is a combined score of 5 items relating to who is in charge of the selection of the audit committee members and the auditor, who is...
I'm interrupting you again. Alain asks us a question about why, or did we not ask about the involvement of audit committees in audit fees and the provision of non-audit services? And I had to take a closer look at our survey again, but indeed we don't incorporate issues related to non-audit fees. I know that in setting the questions, we lean on an extensive literature in regard to that, but no, we didn't include that.
But we do have archival data on the level of non-audit fees.
Yeah, but we didn't ask the audit committee members on this matter, nor the partners.
No. Rogier, unless I'm mistaken here.
Oh, that's correct. That question was dropped in the final version since we had way too many questions. Yep.
I recall vaguely, so that's why I was not completely sure. I recall vaguely something about this, but I also know the process and that.
All 350 questions that we had to trim down somewhat.
I remember that exercise with Matthijs and Karen and Rogier, and we were all going through this. And okay, what
Ganesh,
yeah. So we did that exercise. But okay, yeah. So some dropped out, but we do control. As I think that was also some of the trade-offs that for some things we can get from the archival data, and the non-audit fees were one of these. So thank you, Alain, for asking. Anything else, Karen?
Yes, because I just get a question in from Linda Myers, who actually, and that's an interesting one, and as to why, and that we don't involve management in this discussion, because of course they are the flip side of the story here. Mm-hmm. So besides the audit committee and the partners, it would be very interesting to also hear their side of the story. And Linda asks us if it's possible to survey these partners too. We would love to, of course. I don't know if FAR would be happy with us. If we try that part, but then you would have the three sides of the story, really, right?
Yeah, that's true. That's a very good point, Linda. So we are now really focusing on that interaction between auditor and audit committee, and especially when there's also disagreement with potential disagreement with management, how that interaction between auditor and audit committee could actually influence the ultimate outcome. But you're absolutely right. So this is something that that we're currently not focusing on, but that would be a very nice extension. Absolutely agree. Okay, so for so as I explained, so for power, score. It's about who is in charge of the selection of the audit committee members and the auditor, who is driving the agenda of the audit committee meetings, who is setting the budget for the auditor, and who is driving the approval and the recording of proposed adjustments by the external auditor. And with audit committee fit, we mean the social fit between the audit committee and the rest of the supervisory board, which consists of two items. So the perception of the personal fit and the perception of the relationship between the audit committee and the rest of the supervisory board. And our third construct that we expect to drive audit committee involvement is social cohesion within the audit committee, for which we use a single item score on the perception of the extent to which the audit committee is actually acting as one group. So in the next step, we expect that level of audit committee involvement is actually associated with the joint input process and outcome. So, and what do we mean with the joint input? So we mean the extent of interaction between the external auditor and the audit committee in the oversight process, which is a combined score consisting of 3 items. So the frequency of contact between the audit committee and the external auditor, the number of audit committee meetings per year, and that the external auditor is present, and whether the audit committee chair has at least 1 meeting per year with the audit partner on the engagements without management being present. And with joint process, we mean the quality of cooperation between the external auditor and the audit committee, which is a combined score of 5 items, which relates to the level of trust between the external auditor and the audit committee, the level of support that the audit committee receives from the external auditor, and vice versa. The effectiveness of the relationship of the AC with the external auditor, and the overall level of satisfaction of the external auditor with the audit committee, and vice versa. And then finally, with the joint outcome, we mean the quality of the outcome of the cooperation between the external auditor and the audit committee, which is a combined score of 2 items. So to the extent to which the audit committee involvement has improved the quality of the external audit, and the extent to which the audit committee involvement has improved the quality of the financial statements. So what do we find? Well, I will now turn it to Rogier, who will present to you some of our preliminary descriptive findings, but please note it's really work in progress, and so it's just some descriptives that we can present to you. But still, we believe they are interesting and are happy to share these with you. Rogier, are you able to take over?
Do you see the preliminary descriptive findings?
Yes. Yes.
Yeah. Okay. Then we can go to the first table, actually. The table displays descriptive statistics of several general characteristics of the respondents of the survey, as well as the respective audit committees. First, you see in the table for the responding audit committee members, a large majority is the chair of the audit committee. And regarding age, responding audit committee members are generally about 10 years older than the audit partners. With respect to gender, for both groups of respondents, the large majority is male. And regarding audit committee meetings, the audit committees in the sample, they meet on average around 5 times, and in about 3 of these meetings, the external auditor is present. Further, in the majority of cases, the audit committee meets at least once per year with the audit partner without management being present. And finally, very often, there is at least one financial expert in the audit committee. It should be noted that the values reported here in this table, they concern only partly the same company, so they are separate samples. And I will come back later on what we can learn from the paired observations, meaning that we have a response from both the partner and the audit committee member for the same company. If we look at the descriptive statistics of the main constructs, well, they show that they have sufficient variation, as is indicated by the standard deviations. And of course, we're happy with that. And further, the mean score for involvement, for joint input, so the extent of interaction, and joint process, that is the quality of cooperation, that can be considered as good, with a value of approximately 4 on a scale from 1 to 5. And the same goes for the perceived fit of the audit committee with the supervisory board, and social cohesion with the audit committee. In contrast, the mean score for the audit committee relative power is relatively low, around 3, suggesting that audit committee power is on average about equal to management power. And the mean score for joint output, so that is the extent to which audit committees improve the quality of the external audit and audited financial statements, that is also relatively low, around 3. In qualitative terms, one could say that this is sufficient, but we believe that there is some room for improvement for audit committees in this respect. And at the end of the presentation, we will make some recommendations for audit committees in this respect. Next, the construct of involvement. A first analysis of the relationships among the main constructs that actually confirms our expectations for the determinants of AC involvement. And we start with the results for the sample of audit partners. And that is about 71 observations in these analyses. What we can see is that audit committee power, audit committee social cohesion, and to some degree also the audit committee fit with the supervisory board, that they are significantly positively correlated with audit committee involvement. And further, audit committee involvement is positively correlated with joint input, joint process, and joint outcomes. And we also find that the expected positive relationships between input and process and between process and outcomes that they hold. So, well, in short, one could say that this initial evidence confirms our expectations on the determinants of audit committee involvement. And it also confirms our expectation that audit committee involvement is associated with the extent of interaction, the quality of cooperation, and the quality of the outcome of cooperation between the audit committee and the external auditor. Then if we do the same exercise for audit committee members, for the sample of audit committee members, the results are largely in line with the findings for the sample of audit partners. So this is about 56 observations. And what we see here is again that audit committee power and social cohesion are significantly positively correlated with the audit committee involvement. But audit committee fit with the supervisory board is not significantly correlated with audit committee involvement in the sample of audit committee members. Second, the audit committee involvement is positively correlated again with joint input, joint process, and joint outcomes. And we also find the expected relationship between input and process, but not between process and outcomes. And this is somewhat surprising, the latter, and it needs a little bit further investigation, we think, why that is the case. But overall, for audit committees, for the sample of audit committee members, we again, the initial evidence confirms our expectations on the determinants of audit committee involvement, basically. Importantly, it is also in line with our expectation that audit committee involvement is associated with joint input, joint process, and joint outcome. The relationships between the main constructs and the archival data. Next, we looked for our initial analysis at the relationship between the main constructs and several variables based on archival data. And it should be noted, especially here, that this archival data collection is still in progress. At the moment, we have obtained archival data for only phase 1. And that is so only 6 observations in the audit committee sample and 29 observations in the audit partner sample. And since the former is actually too small, the audit partners, we focus here today on the audit partner sample only. So 29 observations. Specifically, then we looked at relationships between our main constructs and the following variables: audit fees, audit hours, financial leverage, loss, both planning and performance materiality, the number of identified significant risks, the number of key audit matters, and the audit report lag. And these are all standard definitions from the audit literature, of course. Well, yeah, please note that these are preliminary results. It only relates to 29 observations. And what is reported here on the slide are the bivariate correlation coefficients. Our first finding is that, when there is an involved audit committee, the quality of the financial reporting process is arguably better, resulting in a smaller number of significant financial reporting risks identified by the auditor. And further, we find that companies with higher financial leverage, that they tend to have audit committees that are more involved, arguably because of higher financial risk. So that is our first finding. Secondly, and also consistent with the idea that a more involved audit committee is associated with better financial reporting, with a better financial reporting process, the auditor can arguably set a lower materiality level when the audit committee is more involved. So we find a negative association between materiality and audit committee involvement in financial reporting. Then third, and this is our hidden egg.
Oh, here, can I interrupt?
Yeah.
Alain asks us whether we can see any differences between ACs that include members with auditing experience, for instance, regarding the involvement or the joint process. So are we able to differentiate between members that do have auditing experience, like former partners, and those that don't?
Yeah, we are able to differentiate that. So far, the initial results, they don't show large differences in this respect, but that's something that we can definitely and will definitely further examine. Yeah. Based on several other variables in the data set. I'll continue with the main relationships that we have investigated so far. So thirdly, we find that audit committees that are more involved in the external hiring process, that they are associated with more audit hours. And that suggests that if the audit committee is more involved in the hiring process, that they also demand more from the external auditor, which appears to be reflected in the amount of work performed by the auditor. And yeah, on the contrary, actually, we find that companies that experience financial difficulties, that they tend to have audit committees that are less involved in the external auditor hiring process. And this could imply that management is more in control for these companies. Fourth, consistent with the findings for audit committee involvement, again, financial leverage is positively and loss is negatively associated with joint input. And joint input is the extent of interaction between the audit committee and the external auditor. And joint input is also positively correlated with the number of audit hours for the engagement. And when we look at several relationships for joint process, we find, that's the fifth finding here, that the joint process, so the perceived quality of the cooperation between the audit committee and the audit partner, that this is negatively associated with materiality, so lower materiality, with a shorter report lag, and with a smaller number of identified significant risks at the account assertion level. As already mentioned before, we also asked the question what we can learn from comparing the responses for the audit committee members and the audit partners for the same companies, the so-called paired observations. And we specifically looked for 3 items: the extent to which the audit committee involvement has improved the quality of the external audit. Secondly, the extent to which audit committee involvement has improved the quality of the audited financial statements. And so thirdly, the overall level of satisfaction of the current external auditor with the audit committee and vice versa. So we have a slightly different question for the different samples. So in other words, for the last one, for satisfaction, how do external auditors and audit committees think about each other in terms of satisfaction? Here the findings are quite modest. We only find a significant difference for the perceived extent to which audit committees improve the quality of the financial statements, with audit partners on average being more reserved on the contribution of the audit committee than the audit committee members themselves. They are a bit more optimistic about their contribution. But we find no significant difference for the perceived extent to which audit committee involvement has improved the quality of the external audit. and there's also no significant difference apparently in the mutual satisfaction. This is, by the way, rather good. The level of satisfaction on a scale from 1 to 5. Well, finally, we investigated the importance of audit committee support for the external auditor in case of disagreements between the external auditor and management. As Anne mentioned, that is an important issue. And what we find is that audit committee involvement is needed to support the auditor in case of disagreements in order to improve the quality of the financial reporting and the audit. In our view, this clearly shows that our initial empirical evidence so far supports that from the viewpoint of the audit partner, because this is for audit partners, that audit committee involvement that improves the quality of the external audit and also the quality of the audited financial statements. And I will now turn it over to Anne, who will conclude. These were our preliminary findings so far.
Okay, Rogier, I suggest you keep the slides.
Perfect.
All right.
Yeah. Yeah.
Okay, good. So to conclude, so essentially what Rogier.
I'm going to interrupt you because Remco has a question that still relates to the results that Rogier just presented.
Right. Yeah. So yes, because we.
Yeah.
Please.
Yeah.
Please, yeah.
So, can you read it, Rogier? So Remco asks, to what extent can the significant difference between AC 3.3 and auditor 2.7 can be explained or not by a different perception of quality of financial statements? That's a good point. So if they think the same when it comes to what quality of financial statements is.
Yeah, they might have a different conceptualization of that. That is correct. And so this difference could be explained in several ways, but this is one of them, I think. Yeah. I cannot read the chat, Karen, but
no, that was the question. So
okay. Yeah. Okay, clear.
Do we have any other questions? Because essentially we have presented now what we have so far. So maybe it's now a good moment for questions that you may still have on what Rogier has been showing you.
And by all means, speak up in addition to putting it in the chat.
Yeah, so you don't have to put it in the chat. So
please do so. Yeah. I cannot see the chat actually.
Well, it's Olaf here, or Rogier, Karen. So this basically shows, and thank you for, these are really exciting and interesting preliminary, I see what you're saying, preliminary findings. It shows that, audit committee involvement or audit committee and auditor involvement collaboration matters. We also have some auditors in the audience from the firms. So what would your, and maybe this, of course I'm asking here for interpretation or maybe informed opinion here, but if those auditors would want this level of proper audit committee involvement or would want to stimulate their audit committees that may not be so involved to become more involved, how could auditors kind of, what questions would they ask, or what would your advice be to those auditors to get those or to wake those audit committees up, maybe, assuming that some audit committees are not as involved as others. So what could auditors do in their relationship with audit committees to get the goodies that you present?
Yeah, that's a very good question, Olaf. So I don't. Our results are not really providing immediate advice on that point. But of course, I would think that it's also up to the auditor to look for that interaction with the audit committee, and of course, if they are genuinely also interested in having a good conversation with the auditor and are also genuinely interested in to really fully get a good understanding of the risks, then this could then they are both actually, because they are really reinforcing each other. So it's also a matter of the auditor essentially that maybe also with the results that we now show, that maybe the auditor can use in trying to convince audit committees, but please take your role, because it's important, because if we do this together, we can lift audit quality and financial reporting to a higher level. So it's not so the auditor, they can do, of course, their part, but at the end of the day, and I will come to that also in the conclusion, it's like Ganesh in his work refers to the governance mosaic. So it's that interaction between these different persons, but it's not only, and that comes back to the point of Linda, it's not only management, it's not only the auditor, it's not only the audit committee, but it's together, and it's actually in their interactions that they can make it stronger. And that is also a concept that was recently, the concept of value co-creation is a concept that was recently proposed by Robert Neckel in his AOS 2020 paper, where he essentially says, well, if you in the interaction between client and auditor together, they can come to a better outcome. So that's so that's really what I think would be one of the takeaways of this entire project, hopefully, and that's also reinforcing what the AFM essentially is saying, that audit committees must really fulfill their role. But of course, the results also show it's about the power, and the cohesion, and that is something that is out of the control of the auditor, right? Because if management is not willing to give the power, although the audit committee may have the power on paper, but not in practice, then it's of course very hard for the auditor to change that situation, right? But yes, in the past, not for this project, but for others, I've been talking to chairs of audit committees, and we see that some are really genuinely interested in having a high quality auditor on board, because the auditor is essentially helping them to fulfill their role, because they want to know, okay, what are here the risks that we are exposed to? I want to know, and auditor, please help me with this. So, and they're also willing to pay much more for an auditor who is going the extra mile with them and provide and help them in this. So there is this, there's clearly this variation, but I think the key message is that together they can do more than the auditor by himself.
Okay, so you're saying that auditors should not shy away to reach out to audit committee members.
No.
That of course they can meet audit committees that want a painless audit, but then they can use these results to convince them otherwise. I would be interested. I know that there are auditors in the audience, if they can share experience maybe later on, or how they would approach it. But thank you, Anne, for your answer. That's clear.
Okay, maybe we go back to the also the results, because so Rohit, you can go back, and maybe with regard to the results, are there any other questions?
Because I have a question here from Niels, who asks the extent of audit committee involvement the extent that audit committee involvement has improved the quality of the audited financial statements rates At 3.2, he finds it relatively low and asks if we have any explanation for that. So the 3.2, yeah.
This one, Karen, the
Yes, the 3.2 in the second row, first column. Yeah.
No, indeed, that's what we observed. That this is relatively low on a scale from 1 to 5. You could say it's just sufficient, even the 2.8. But we think we see luckily variation in the degree of improvement in the quality of the external audit, the perceived improvement. But on average, yeah, we could say this is, from a practical point of view, an opportunity for further improvement. And one way to further improve it is to be even more involved on average. We see that also on average, involvement is related to the perceived improvement that the audit committee brings to the process. But this average could be further, at least theoretically, it could be further improved by being also more involved on average. Although involvement isn't bad, so involvement is on average, I think it was 4. But other things that could then stimulate the involvement itself is indeed the relative power to management, and also the cohesion in the audit committee itself, that they indeed act as a group, as the item states, and that it's not just, for example, the chairman that is dealing with the auditor, but the audit committee as a collective. So they also might have opportunity to do team building, or at least to act as a team and not as individuals. Does that address your question, Niels? And feel free to speak up, by the way, because we
can't see you.
Yeah, I don't dare to click on anything in
Teams.
in Teams to prevent
total destruction. Yeah. Neil says it's all clear.
Yeah.
I have another question from Linda, who says, and I'm just going to read out. Or Linda, maybe you want to speak up if you wish, so we can hear you. Yes, no? I guess I'll read out.
Please.
Linda, Linda says I don't know how. So there's more than just me who doesn't know how Teams works. Anyway, or maybe you're muted. That's a possibility. Is that possible, Olaf? That people are muted and they can't unmute themselves, or?
No, they're muted, but they can unmute. And the unmute button is on the that's right top corner. That's a microphone. I think Teams is so self-explanatory, guys.
It is actually. It is not.
When you use it every day, it is.
You have to use it more than once.
Well, let me explain that some of the firms do not allow Zoom, and that's part of our target audience. That's why we don't use Zoom. But
Linda says when I click on it, nothing changes. So I'll just read out Linda's question because it's a good one. Linda says on the relationships between the main constructs slide. Some are input measures, some are output measures, and some seem to be company characteristics. I wonder whether the company or context-specific characteristics are an important determinant in how the process or audit committee characteristic variables, the black box variables, affect the inputs and outputs. So whether the company or context-specific characteristics. This one, yeah.
Yeah, that's a very good question. We have explored further the relation between also other characteristics of the audit committee and the input process and outcome. So this is not the full picture. This is the most significant relations, and also in terms of our conceptualization of the determinants and the effect of involvement on the input process output. But there are several items related to input. Also, some items related to process and to output. for example, the audit committee experience, so the perceived experience of the and competence of the audit committee in the view of the audit partner is very much is correlated with output, and several characteristics also correlate with input. For example, the number of audit committee meetings that is correlated with input, and also the type of audit, whether it's year-end versus interim reporting, interim audit, and also the auditor expertise is related to input. So it will be very interesting, we think, to also include this in the multivariate model and see whether these these relationships that we have explored so far, to what extent they hold in a multivariate model. What we did so far was some structural equation models, but with a limited number of observations, and also some seemingly unrelated regression, which is actually a type of structural equation model. But the relations that are shown here, they hold. But the relationships with the other characteristics that are typically used in studies based on public data, they are less significantly correlated with the for example, input, process, and outcome as the perceived involvement, for example. Is that
yeah, but again, Rogier, you have to stress here that this is based on 29 observations.
This one is the figure with 71 on for the audit part.
Okay, yeah, but for the relationship with the archival data, that's we only have the 29. So yeah, I would.
Yeah, I was half guessing Linda's question. I thought she meant means characteristics that we could also measure in the survey in another way. So not with the archival data.
Okay. Oh no. So then
with the survey data, but that's an assumption here. I'm not.
Okay, no. So then no, you're absolutely right. Sorry.
And I'm happy to report that Matthijs has joined the chat.
Fantastic.
with his Maastricht University account. So I don't know what's going on here. I mean,
Linda, does it answer your question? Or answer, does it? Do you have a follow-up question maybe, or someone else?
No, but I do have another question by Jan Owens. Linda says thank you, so that's great. Jan asks us, you compare opinions, how can we be sure that these opinions are valid? Fair question.
Yeah. So in the previous slide you showed, that where you compare opinions between ACs and partners, and I was just wondering, how can we be sure that that underlying these answers, right, that actually measures the constructs that you are after?
Yeah, I think that's an assumption. What we
well, I guess that you perfectly showed earlier the Cronbach alphas on the internal validity. Although still it is perceptions. Sure, the scales are.
Exactly, I would say it's only perception, Jan. We simply don't know whether the true, for example, audit committee involvement is. What is true audit committee involvement? What we do have is information from the perspective of the audit partner and from the audit committee members. And what we have seen so far is that on average, they don't differ that much, but they look at things differently. So we don't know what the true underlying audit committee involvement then is, and also not the, for example, the true increase in the quality of the financial statements. What we do believe is that these perceptions on involvement and on joint outcome, that the correlation between these perceptions, that is informative. But I wouldn't dare to say that the auditors have on average a more correct view, or the audit committee members they might have often different views, and often they have the same view on audit committee involvement, but also often you see different opinions. So that for the same client, the audit partner has a different opinion than the audit committee chair, for example. And yeah,
well,
so that's a very good question.
Well, maybe one way to enhance this validity and is maybe it's possible to actually match your perceptions up with more like factual types of measures, right?
Yeah, exactly.
And to see,
I think
to see how they are related.
Yeah,
because
that you see
because
for example, for the audit committee, this one, the joint input, that this is correlated with the audit hours. That is sort of a validation of that if the auditor is doing more work, he also interacts more with the audit committee members. But indeed, in the archival data, there might be more.
Well, we have the report lag. I think you show the same.
The report lag, yeah, that's also, we could also frame that in terms of validation. The joint process is negatively correlated with the audit report lag, which you wouldn't expect if this would just be a, I'm thinking out loud here, if this would just be a perception only, and it is a perception in the end, an average perception, but this average perception is negatively related to the audit report lag. So if they are more positive about the quality of cooperation, then the auditor also makes a quicker, is faster in the audit, so to say. But yeah, we
implying that there are less disagreements, because typically the report.
If we have like 7 minutes left, and maybe we can go to your key takeaways and some last round of questions.
Okay, that's fine. So here, can you bring me to the slides of what's next?
Yeah.
No, that's too far. The what's next? The one before.
This one.
The one before. Yes. Okay. So what we're here essentially has shown you at today our first preliminary descriptive findings. But our next steps are of course to further complete the data collection, both in terms of survey data for the second batch and also further collecting the archival data, because then we indeed have more the factual data that Jan was referring to. And hopefully we will have a sufficient number of observations to actually conduct multivariate analysis. So because now, it's just descriptive correlations, and they are already providing us with nice insights, we believe, but still you would like to have some controls in place as well. So what are the key takeaways? Okay, can you go to the next slide, please? All right. So for now, I think what we learn here is that that our findings seem to support essentially what regulators are asking for, and that audit committees must fulfill their role, and that means that audit committees have to be critical, which is what they do when they are involved, because they ask more critical and probing questions, and at the same time that they're also are supportive, which requires that there is a trust relationship between the auditor and the audit committee. So now, based on our descriptives, we really conclude that the level of audit committee involvement really matters for audit quality. We also see that power and cohesion appear to be two major drivers of the level of audit committee involvement, and audit committee involvement in turn appears to be a driver of the extent of interaction and the quality of the cooperation and the quality of the outcome of the cooperation between the audit committee and the auditor. Now, the role, as Rogier has also shown to you, the role of the audit committee also becomes clear when there is disagreement between the auditor and management, and that's when an involved audit committee can potentially really make a difference by lifting audit quality to a higher level, if you will, and together with the auditor really ensure the quality of financial reporting. And then, as I mentioned before, also in my response to all of the question before, this key takeaway would also be consistent with the idea of the governance mosaic, which was put forward by Ganesh and his co-authors, and the notion of value co-creation, which was proposed in the one of a recent paper by Robert Neckel, where he's actually highlighting the importance of a successful cooperation between the auditor and the clients for improving audit quality. And there he does not only refer to the audit committee, but also to management. And that brings us back to the question that Linda was raising at the very beginning, because there are multiple partners, and so it's really parties, and so it's really management, audit committee, and auditor, and who have a central role to play here. Okay, so I think that's for now our key takeaways. So we still have some time for Q&A. So here, maybe you can.
Yeah.
Okay, so if we still have a couple of minutes, or maybe all of you would like to close, that's also fine. Then, of course, I would also like to thank everyone for being here, for all your comments and suggestions, and also for attending this session.